Hi everyone, welcome back to Upside Down Data. Today I want to talk about capitulation in the crypto markets. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, but a lot of updates, better indicators, and more over there. So the reason I want to talk about capitulation is that this is something that people talk about a lot in bear markets, particularly when they're looking for bear market bottoms. The idea goes that, once you're in these parabolic rallies, they're moving up, everyone's a bull, everyone thinks price is just going to keep going up. Start moving into a bear market, a lot of people disbelieve it, think that price is soon going to recover back to the upside. So you have a lot of bulls still hanging out in the market. But then over time, as price grinds down and down, more and more people start to get worried, sentiment starts to reduce, and then finally you get this capitulation where a lot of leverage gets wiped out of the system. A lot of people who aren't necessarily in the asset for the long term end up selling out, and you're left with only really the people who are there for the longer term, the people who are willing to hold for a long term, holding Bitcoin. You exhaust the sellers in this big capitulation movement where all of the sellers who would sell get out, and then you're left with people who are more likely just to hold. You lose the buying pressure, you lose the selling pressure, and then it's really buying pressure that starts being able to push price back up. And then, the hype cycle, repeats into the next bull market. And so, obviously the one thing to say at the onset here is that's the way that Bitcoin's worked all the way up till now. Some might argue that, this time's different. Macro environment is so negative and horrible that we might not get this capitulation that then triggers the next bull market, that we might actually get a series of capitulations that are kind of a cascade. Who knows? Time will tell. But I just want to talk with that, historical framework in mind. And then think about this capitulation we've seen over the last couple of days. Bitcoin dropping all the way down into the $17,000 range yesterday before bouncing up to in the 19Ks as I'm recording right now. So this big plummet down here. And what this looks like in context of history. So I'm starting off here by talking about the momentum bias indicators. This is a model that we have here on the channel that quantifies momentum in the market, and particularly is it biased to the upside or to the downside. So 0 is the average momentum in the Bitcoin market, which is of course positive, and then values are denoted in standard deviations. So 1 standard deviation above the mean, 1 standard deviation below the mean. And so essentially, when you're looking at this, bear markets are characterized by a lot of negative momentum bias, and that's exactly what we've seen here. But one thing also is interesting to note is just the actual level, just the level of the MBI here is sitting down below -1. It's only the second time in history that we've ever gotten an MBI rating this low. And in fact, the last time we saw this was the March 2020 capitulation. Was that massive drop. I think it was somewhere in the order of a 38% candle in there, or somewhere in that ballpark. It was just a massive single day just capitulation drop off of the map for the Bitcoin price. And in fact, from the model's perspective, we've had a capitulation just as severe as that March 2020 crash. This is as negative as momentum bias has ever been, basically, right now is what it sees. And so really what it's saying is that, if this, when we were going down into this capitulation that we saw going down to 25K, a lot of people were asking the question, was that the capitulation? From this model's perspective, and what I was saying at the time is like, well, it could be, but it wouldn't necessarily, right? This wasn't particularly notable from a historical perspective. It was more or less in line with what we've seen in other bearish periods. Could have been the bottom, but didn't necessarily have to be. This becomes a lot more extreme. And if we break down below this, then it might be an argument to some degree that we're seeing new things. This is something that Bitcoin's never experienced before, having such negative momentum in it. And that'll be something that we'll have to keep an eye on, we'll have to pay attention to. But so far, we're basically at the level of the March 2020 crash. So if we're looking for, the capitulation, or could this signal a local bottom, I think it certainly could. Bitcoin, from this model's perspective, is historically oversold right now. And, with markets, they tend not to move in one direction forever, or it's hard for them to maintain just one direction for too extended of a period. You tend to get some volatility at some point. So it wouldn't surprise me at all if we see a bounce at around these levels. I don't know if 17.5K or whatever we got down to yesterday, if that's going to necessarily be it, if we're going to have to move down first. But this general range would not surprise me if we're able to at least catch some kind of a bounce before, the possibility of further moves to the downside. Because this is just certainly very historically oversold. But again, it doesn't mean that that has to happen. As I mentioned, the macro environment is so incredibly hostile to risk assets that I think we have to be a little bit cautious, and we're not really sure if this is going to be the bottom. One thing that people have noted is that in the recent past, when Bitcoin has caught these kind of bottoms at these capitulations, it's coincided with the Fed signaling a reversal of their policy, and that certainly is not going to happen anytime soon. So we're in a bit of uncharted territory. But again, even for a local bottom, it would not surprise me if this could act as that, if we could catch at least some kind of a bounce, or at least get some sideways movement from here before just wrecking, continuing back to the downside. But again, time will tell. Another model that we have here on the channel that's confluent with that idea of at least maybe some temporary reprieve from the downside is our upside downside potential indicator, is our risk indicator here at the channel. That basically just quantifies risk. And so, 5, getting up towards 5, this is the highest level of risk, and the upside potential is exhausted, downside potential is quite high. And -5 is the opposite, is where the model kind of would expect downside potential to start getting exhausted and the upside potential becoming more realistic. But again, this is all trained. This is a machine learning based model that's trained to data, Bitcoin data, that's only ever existed in a macro bull market. So if we are about to head into a recession, obviously you could argue that that's it could be different that time around, that this data might not be as diagnostic in that type of environment. But certainly, again, for that possibility of this at least being a local bottom, I think it would be very plausible for that to happen here, because this is, again, the long-term UDPI does not get down to these levels. So this is the long-term version. It cares about moves that play over months. It does not get down to these levels except for really these macro capitulation moments that we see that oftentimes then mark at least a local bottom. Even if, the one case we might look at is back in 2015 where we had that capitulation and more or less moved sideways till we had a second bottom before moving back up. But again, we didn't just continue puking. And so it's very possible, I think it's very reasonable to believe that this could be at least a local bottom. But again, who knows? But certainly what we can see across both of these models is this is a pretty major capitulation from a historical perspective based on these models, right? The MBI is saying this is the second worst negative momentum bias we've ever had. Long-term UDPI is down at levels, it's the second lowest level we've ever had. The only thing that's ever been lower is the 2018 bear market bottom. And so if we're just trying to quantify this capitulation, I think it's unquestionable that what we've seen has been quite historically massive. It's been quite historically large capitulation. And I just think it's useful to look at these models, because when you look at crypto Twitter or elsewhere, a lot of people are saying that Bitcoin's just immediately going to nuke down to 10K from here. That there's going to be nothing to stop it. It's just going to go straight down. And that certainly could happen. But if that does happen, I think we just need to keep in mind that it'll be historically surprising. It'll be a new event. It'll be something that Bitcoin has never done before, to puke to those levels. It's never been down there in the momentum bias indicator. Never been, it's only been down to these levels on the UDPI once. We'll look at some other indicators that also indicate how this is also, looking like a pretty major capitulation. But I wanted to start with these models. All right, let's flip over to the Bitcoin chart, look at some other indicators. And what I want to start with is just the RSI, the Relative Strength Index, which again is a momentum indicator. Basically tells you kind of the relative strength of a given move. And I want to talk about the daily time frame and then also the weekly and the monthly, because they give some interesting perspectives. We can see on the daily time frame that yesterday in that puke down to 17K, we bounced up a little bit there for the close. We closed up closer to 19K. But even at that close, we're closing at a daily RSI of about 20. And that's historically very low. We've only been there. We were there again back here in January. And then, we know what happened from there. That marked at least a local bottom. We're down at similar levels back here, where that ended up being a local bottom. We were down there again in, or more or less at that area, a little bit higher actually in the May crash. Then we had a bit of a bounce off of there. Obviously the March 2020 crash, we were even deeper. We were at 15. And if we go back to 2018, we're down at 9, so even deeper. So on the daily RSI, this is not historically shocking, so this is not the lowest we've ever seen. But where we do start seeing it being the lowest we've ever seen is if we switch over to the weekly and the monthly. So if we look over at the weekly RSI level, we're currently sitting at 25. And in fact, that is the lowest that we've ever been. So if you look at the March 2020 crash, it only ever got down to 33. If we look back at the 2018 absolute bottom on the RSI, it was 28. And if we go back all the way to the 2015 bottom, that was 28. And then the second bottom was actually even higher than that. And then the bottom back here in 2011 was down at 35. So we've never had a weekly RSI level as low as where we are right now. This is historically low momentum. So again, being confluent with the MBI, we really have not seen levels this deep. And in fact, on the weekly RSI, it's the deepest it's ever been, even deeper than 2018 was, currently being at 25. And let's look at the monthly, because this also offers a similar view. Where we zoom out to the monthly charts, Bitcoin's down 38.6% in a month right now. Absolutely brutal. And the monthly RSI is at 41.45. That is higher. 43.8 was where it was in the 2018 crash. The March 2020 crash was all the way up at 48. And then we also see 44 for the 2015 bottom. And then we see, even higher than that, 54 for the 2011 bottom. So being down here at 41 is the lowest monthly RSI rating we've ever seen. And so really what this is kind of suggesting is that even though on the daily time frame, a more kind of smaller time window horizon, this has not been as strong of a capitulation as we've seen before. When we just look at this on the larger time frames, when you take into account the data, not just kind of on this day and the 14 days before, but this week and the 14 weeks before, the RSI by default, most people use 14 periods before to look at. This down only we've had for the last several, well, really ever since March for the most part, is historically shocking from an RSI's perspective. It's historically oversold. It's never been lower. We've never seen this much downside this fast before, something that's this strong to the downside, which would also just signify that this is a pretty historically remarkable capitulation we've been seeing. Again, that doesn't mean we can't go lower. Macro conditions might make this time different. But just to put it in a historical perspective, this is a historically oversold level for Bitcoin. And it's just something that's important to keep in mind because, people are always going to be revising their downside targets to be lower and lower and lower. I think it's also just important to keep into historical context. Where actually are we right now? And certainly if your thesis is that the macro environment is so hostile that it's just going to keep dragging price down, you might not care about these historical comparisons at all. You might just say, well, who cares? This time's different. We're going to nuke down to lower levels, something that we never would even thought possible with Bitcoin. And that could absolutely happen. But I still think it's important for us just to know where this stands from a historical perspective. So let's look at some other indicators. An on-chain indicator here that's talking about the depth of this capitulation. So a chart that caught my eye and I think is interesting to talk about is the Bitcoin days destroyed and lost metric that Chain Exposed has on their site. And so if you're not familiar with Bitcoin days, the idea is that when someone buys one Bitcoin, then every day that Bitcoin sits in their wallet, it accrues 1 Bitcoin day. So if I buy a Bitcoin today, hold it through tomorrow, it's accrued 1 Bitcoin day. If I hold it for a week, it's accrued 7 Bitcoin days, etc. And then you destroy those Bitcoin days when you sell that Bitcoin or when you spend that Bitcoin. If I move that Bitcoin out of my wallet, I now destroy however many Bitcoin days it accrued. So if I let it accrue 14 days, if I held it for 14 days, it would have 14 Bitcoin days. If I then spent it, I would destroy 14 days. So that's what this is looking at. This is specifically looking at people who are selling in loss. So people who are spending their coins at a loss and then just taking how many Bitcoin days have been destroyed. And this is a 90-day moving average that we're looking at here. So this is the 90-day moving average of the number of Bitcoin days destroyed across the entire network. And what you'll notice from this is that it tends to really spike up at these big capitulation moments. So the bottom of 2011, the bottom of 2015, the bottom in 2018, also spiking up in March 2020, and then again spiking up today. Now, of course, when we look at this, we can see that it's not as high as it's been historically, but it's getting up to those same levels. It's at about the same level as the March 2020 crash. And the reason why I like to look at this as a capitulation marker is that this is going to be much more affected by long-term holders than short-term holders. Because again, the way this metric works is that if I've been holding Bitcoin all the way back since, like, let's say 2015, I'm going to have, you know, hundreds of Bitcoin days accrued sitting in on just that one Bitcoin I'm holding in my wallet. So if I spend it now, I'm going to be dumping in a very large number of Bitcoin days that I'm destroying. Whereas sometimes someone who just bought in the last couple of days and then sells, they're only adding just a couple Bitcoin days destroyed to this metric. So this can kind of give us an idea of is long-term holder capitulation. So, you know, the higher this metric gets, the more likely it is that longer term holders were dumping their Bitcoin. Because again, this is going to be getting larger and larger the longer that people have been holding it. Now, again, this is in loss, so obviously, you know, this metric will really just be looking at people from kind of this time period here for being people who are destroying it in loss from the longer holder's perspective. So really what these kind of spikes really kind of represent is that people who are buying at these higher points, these higher topping points, are now really capitulating out. And that tends to be what happens at the bottom of these markets, that people who bought in during the mania might be holding, hoping for a better outcome. They're aging into the long-term holder cohort, but they're not kind of the OG people from all the way back here. They end up then selling at a loss as you get into this big capitulation, and that's what really shows up here. And that tends to mark kind of this reset period. So it's a long-term holder capitulation, but particularly long-term holders from the more recent history who had bought up at the top and are finally giving in and selling out. And then maybe moving their coins, or people are maybe buying their coins who have maybe a longer time horizon who aren't going to be capitulating out. Kind of a bit of a reset from this mania phase. A lot of the bag holders who are still existing up here dumping out, and then letting us kind of build that next level of support before we can start moving back up potentially. So really what this metric, what I wanted to show here is that we're getting back up to these historic capitulation levels. Now, what's different about this metric versus the other ones I was showing you is that this is not anywhere near historical levels yet at these, but again, this is the 90-day moving average, so it's a lagging indicator. So as we go from here, I think I'm expecting this to continue moving up, more likely than rolling over immediately. I'd expect, unless we have a V-shaped recovery like here, I would expect this to continue rising. So let's talk about one final kind of piece to the puzzle that I think is important to keep in mind, and that's sentiment in the market. So we've talked about the fear and greed index for Bitcoin before. This looks at a bunch of different metrics to try to gauge fear and greed in the market. And, you know, one of the things that we can see right now is that it's at extremely low levels. It's currently sitting at 6 out of 100. And that's lower than it had been really through any of these other capitulations. You know, it's lower than any time in the summer, lower than any time even in the drop down to 25K, even though people were really scared at that point. It's the lowest level it's been really since the March 2020 crash, and even lower actually than the 2018 capitulation. And you can see this also manifesting on other platforms. So for example, you know, mainstream media is now kind of declaring cryptocurrency dead. You know, we're seeing, you know, opinion pieces like this one from Robert Wright here, that's talking about how, you know, crypto is a Ponzi and it's all falling apart. And also just to look on crypto Twitter, you know, there are very few bulls left anymore, and people tend to be getting upset at people who are bulls, and everyone's calling for lower prices. The consensus is starting to move towards the idea that we're going to keep on dumping. And that's also a characteristic of capitulations. You know, that's what you see, what happened in this move down in March 2020. It's what happened here. It's what happened back here. So it happens down at the depths of every single crypto bear market that we've ever seen. And so again, if we're just trying to gauge how bad is this capitulation from a historical perspective, we're starting to see a lot of the hallmark signs of this being kind of a deep capitulation. And so really my thought with this and my idea with this video is that I think there's kind of two ways that we can look at this. So the first way is that if we assume the historical trends are going to hold, they're going to be predictive of the future for Bitcoin, this is looking more and more like we're getting towards the bottom, right? This is looking more and more like we're getting towards the bottom of the crypto market. Doesn't mean we're there yet. Doesn't mean we can't keep going lower for a bit, but it's looking like we're maybe at least at the beginning of the end, maybe, of this bear market, or at least starting to maybe start finding more of a bottom. But the other way to look at this as well, and this is one that we can't discount right now in my opinion, is that we do have to keep in mind this is a different macro condition than any of these other ones back here. And again, like I mentioned before, in the history, Bitcoin has usually found its bottom, at least more recently, when the Fed has started to signal a switch in their policy position. And that doesn't look like it's coming anytime soon, or at least for months. there's some people who are arguing that there's a lot of signs that a recession is either currently happening, we're currently in one, or it's imminent. A lot of, early potential warning signs of economic weakness that could lead to big jumps in unemployment, which then could force the Fed's hand and lead to a pivot. But again, even if that does happen, it would take months for it to manifest, and we're here. And so if the market's going to keep nuking, we don't have months to wait to find the bottom. It could continue down from here. And so that's the one caveat with all of this, is that we're getting into places where further downside, further capitulation would be historically surprising. But we're also in a different historical point right now. We're in a kind of a historically surprising, from the context of Bitcoin's history, this is a historically surprising macro condition to find ourselves in, with record high inflation. Well, not record high, but 40-year high inflation and all that kind of thing. And so that's where I personally am a little bit cautious, where all these indicators to me are saying that this is historically speaking a pretty massive capitulation, and historically that has oftentimes marked these generational buying opportunities in macro cycle bottoms. But the reason why I'm not just thinking that this is it, load up the truck, go all in, etc., is that there's a lot of uncertainty in the macro picture that makes that a lot more questionable of a call. Now, again, none of this is financial advice. You should be making your own opinions about these data that we're looking at here. But that's just the way that I'm looking at it. That I think it could go one of two ways. That if we have seen the worst of things in the macro picture, and if things kind of on average can generally get better from here, then this will have been it. And we'll probably look back in the past and say, well, obviously it was it. Look at all these indicators and what they were telling us. But of course, that would be the benefit of hindsight in that scenario. Because the other possibility here, that the stock market nukes 2018 style, goes down, draws down from another 50% or whatever the case may be, and then we end up seeing crypto crash back way below levels and just end up putting in historically massive, for example, spikes here, or historically low ratings on the RSI to even greater degree they already have, or on the MBI, or on the UDPI, etc., because we've entered into a new paradigm. We've entered into a new market condition that Bitcoin has never seen. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put updates about our indicators and more over there.